Vaibhav Puranik. I am Chief of Staff of a company called Aven Financials. Aven is a heloc-backed credit card. So if you know, typically American consumers are used to using credit cards and personal loans for their debt, and they come with 15 to 25% interest rates. What we're doing using home equity is giving them interest rate which is single digit, 3 to 9%. And since it's a credit card, we can also give them rewards, 1.5% cash back. So our aim is to try and give people the lowest cost of credit they can afford. Correct. Your credit card is backed by the home equity of your house, but we also look at your credit profile and things like debt to income ratio to make sure we are giving you credit which makes sense for you. The home prices going south don't affect the borrowers. What we do is keep limits on CLTV, which is cumulative loan to value ratio. So we don't lend typically beyond 80%, or for very high credit borrowers beyond 89%. So even if the home price decreases by 10-20%, they're still safe. The company is 2 years old. We launched our product last December, and we're live in California so far. We've just applied for a bunch of other states, so we're hoping to get 10 more states by end of the year. Good question. So HELOC is very complicated. Typically, if you go and apply for a HELOC at a bank, it'll take you 6 weeks. They will send a person to your home to appraise the home. You will probably sign a 150-page document which somebody will come to you, or you will have to go to a lawyer's office, and they will charge you $2,000. And on top of it, they might charge you unused fee. They might make you take the whole line. Typically, HELOCs are like $120,000 on an average, so that's a lot of money. People typically don't need that much money. What we do is our HELOC takes 15 minutes. It's completely online. We don't charge any fee, and our lines go from as low as $5,000 to $100,000 now, but hopefully this week we'll move the line size up to $250,000 for very high income, high home ownership areas. So yeah, that's the difference in our product versus the typical HELOCs in the industry. So we have a layered approach. So we do a bunch of work upfront on fraud detection and identity verification. So we use a layer of providers. Some of them are here. To make sure this person is who they say they are, and this identity is actually not stolen, and it's not somebody else using somebody else's home address. But then we also do title research. So we look through a bunch of other databases to make sure the name on the title, there's history of transaction history, all of that stuff. There's history in property tax being paid by the borrower, things like that. And then finally, the person actually has to come and do a notary session with our notary. So we've built our own software to actually, for this person to come just on a web, using a web link. They don't have to download an app, which is what typically other people make you do. So this is all done. So we actually see the person live. They have to put up their ID front and back, and we scan that and get additional data points from it. We look at IP, we look at devices. There's a lot of work done to make sure this is very secure. So HELOCs traditionally is used for large purchases. And so people use it to redo their kitchen, put a pool in. But given how flexible our HELOC is, how quickly, we've seen two other use cases which have happened. So we've seen people buy car on our HELOC, because typically car loans could be 5-6%. So they are like, hey, I'm getting 3% here, why shouldn't I do that? People have transferred their home loan over from like a federal rate of 6%-ish to 3-4%. But we've also seen a lot of people consolidate their debt. So instead of their 20% on their credit card, or 15% on a lending club or one of the other personal loan lenders, they will move this to our loans and get 6%. Plus, if they use the card, they get 1.5% cash back. So it's a really good deal for them. Actually, yes, I think pandemic, not more from an home equity perspective, but really because people were more comfortable with doing this online. Actually, they wanted to do this online. They didn't want somebody to come to their home and make them sign papers. They were just uncomfortable going to a lawyer's office. So that really helped us a lot. The second part which helped is the fact that people realized that home equity, using that is much more safer for them to, instead of taking an unsecured loan and have very high interest rate, which actually eats into their income, especially in pandemic. A lot of people had lesser income than what they had before. So that's the two factors which helped us a lot. Right, so there are two ways to think about multi-state expansion, right? What we've done is partnered with a bank, so which gives us ability to go across states. But if you are a lender, direct lender, you could go and get licenses across states. That's typically a multi-month, multi-year exercise. But in home equity, it's even more complicated, because we have to get Department of Real Estate endorsements for mortgage loan origination in each state. We need servicing licenses in some states. So we are going through that process. It takes a little bit of planning. You have to work with your law firm. There's a lot of work in terms of writing a business plan, which the states should approve. You need people to get licensed, so that's what we're doing. You actually have to go and get real estate licenses in each state, and you need people who are trained on how to make loans in each state and with the state rules. So it needs a little bit of planning, and so we feel it's going to take us like 2 to 3 years to get to every single state in the country, but I think we will probably cover 60-70% of the country in the next 6 months. Not announced yet, but I think we've been approved in Colorado, very close in Arizona, and then there are 5 others. So I'm hiring for general counsel. We're looking for capital markets folks. We're looking for engineers always. I think all startups look for engineers all the time, but we're looking for growth and performance marketing people. And finally, I'm looking for credit and sort of loan specialists and fraud specialists. Start more companies. There are a lot more tools available to start companies than when I tried doing this 6 years ago with my own neobank. And enjoy the conference. Thank you.